Good day. Welcome to another section of AE Accounting Tutorials. Today we are beginning another series on partnership accounts. The partnership account is a very broad topic, so we are going to take it series by series. Is that okay? And we are actually going to focus on the theoretical aspects that relate to accounting. Is that okay? But then the theoretical aspect that relate to the managerial aspect of the partnership business, we are not going to tackle that into details. Our focus today is going to be on the theoretical aspect that relate to accounting. Is that okay? So when we talk of partnership is an association of two or more individuals carrying out a business jointly for the purpose of making profit. Is that okay? And partnership business has a minimum number of 2 and a maximum number of 20. Is that okay? So basically that is the meaning of partnership. Before we register a partnership business, the members have to submit their partnership agreement to the Registrar of Partnership. Is that okay? And there are certain vital information that's supposed to be contained in the partnership agreement or the partnership deed. Is that okay? The partnership deed, it is a legal document that contains information about the members of the partnership business. Is that okay? That is the terms and conditions of the partnership business. It is actually found in the partnership deed or partnership agreement. So we are going to look at some key components of the partnership deed, vital information that's supposed to be part of the partnership agreement before the Registrar of Partnership register the partnership business. Is that okay? So let's look at some vital information in the partnership business. So components of the partnership deed or agreement. Okay. So we are going to look at some vital information. The first information I need to talk about, the information I'm going to talk about here, it is actually relating to the accounting aspects. Okay, I will not be looking at the managerial aspects. So the first item I would like to talk about is the amount of capital each partner should be contributed. So that is the amount of capital contributed by each partner. Okay, so the amount that they should contribute towards their partnership business should be actually stated in the partnership agreement. Is that okay? So that is one. The amount of capital to be contributed, and two, the profit or loss sharing ratio. That is the ratio at which the partnership or the members of the partnership business will share their profit or losses. Is that okay? So the ratio, okay, it must be part of the partnership agreement. And three, so partners' salary. That is, if there should be any salary that's supposed to be paid to any partner who performs some special service to the partnership business as a whole, or if there is any remuneration or salary to be paid to any active partner. Is that okay? It's supposed to be stated in the partnership agreement. The fourth one is the rate of interest to be paid on partners' capital. Is that okay? So the fourth one is the interest to be paid on partners' capital. And five, the rate of interest to be paid on partners, or the rate of interest to be charged on partners' drawings. If there should be any interest charged on partners' drawings, it must be also contained in the partnership agreement. And the method of goodwill valuation too supposed to be included in the partnership agreement. And also, if there is any interest that's supposed to be paid on partners' current account too, it's supposed to be included in the partnership agreement. So basically, these are some of the vital components or informations in the partnership deed that actually relate to the accounting aspect. Is that okay? Okay. So after looking at the basic component of the partnership agreement or partnership deed, I would like to introduce the general subtopics of this partnership business. That is how we are going to look at the various subtopics under this particular partnership account. Is that okay? Because I told you it is a very lengthy topic, very broad, and we are going to do it series by series. Is that okay? So the first aspect of or in our next video, the first topic we are going to look at is the final account of partnership. As a partnership business. Okay, so the first topic we are going to look at is the final account of the partnership business. So when we talk of the final account of the partnership business, one, that is the trading account of the partnership, the profit or loss account of the partnership, the profit or loss appropriation account of the partnership, and that of the statement of financial position of the partnership business. But the trading account and that of the profit and loss account, it is like that of the sole trader. Okay, so we are not actually going to look at those ones. I've made videos on that on sole traders. Is that okay? So the new thing here is the profit and loss appropriation account. So we are going to tackle the profit and loss appropriation account. Is that okay? So we use the profit and loss appropriation account to actually share the profit or loss made on the partnership business among the partners. Is that okay? Then with the statement of financial position, it is equally the same as that of the sole trader. But the difference here is that because there are several partners that actually come together to form the partnership business, their individual capital account balances will be different. That of the current account will be different. And because of that, it will give rise to the preparation of the partner's capital account and that of the partner's current account. Is that okay? So we are going to look at how we prepare the profit and loss operation account, the partner's capital account, and that of the current account. Is that okay? So with these two accounts, the partner's capital account and the current account, we actually maintain this two accounts when we are operating on a fixed capital account. Is that okay? But in a situation where we are operating with a fluctuating capital account, we combine the two together. Is that okay? And the second thing I would like to talk about is the changes in partnership. And this changes in partnership has its subtopics. Okay, so A, that will be on admission of a partner. Is that okay? So under changes in partnership, so this will be the first subtopic. Is that okay? This is the subtopic. So the first video will be on the final accounts of partnership business. Is that okay? So the second aspect will be the changes in partnership. And in changes in partnership, the first thing I would like us to talk about is the admission of a partner. That is where the partnership business will decide to admit a new partner into the partnership business. So we are going to look at how we make an accounting treatment when we admit a new partner. But mind you, for the admission of the partner, sometimes we admit partners at the beginning or at the end of the financial year. And each accounting treatment is actually different. And sometimes we admit a new partner into the partnership business at the middle of the year. And each accounting treatment is also different. And we are going to look at that one too. Is that okay? And the B I would like to talk about is the death or withdrawal or retirement of a partner. Is that okay? So if any of the partner dies or withdraw or retire from the partnership business, we're supposed to actually make accounting treatment for that. We need to prepare an account for that. So we are going to look at that one too. Is that okay? And sometimes partners may withdraw or retire from the partnership business at the beginning of the financial year or at the end of the financial year. Okay, and sometimes too at the middle of the financial year. So we are going to look at its accounting treatment. Is that okay? And the C part I'd like to talk about is the amalgamation. Amalgamation of partnership business. Okay, with amalgamation of partnership business, that is when two or more partnership business comes together to form one partnership business. So when this happens, we need to actually close the individual account of the partnership business, and then we actually prepare a single account for the new partnership business that we are to form. Is that okay? So we are going to look at the accounting treatment for this one too. And D will be the dissolution. Dissolution of partnership business. With the dissolution of partnership business, that is where the partnership business ceases from operating. Is that okay? They actually want to bring the partnership business to an end. Is that okay? So when we want to bring the partnership business to an end, we have accounting treatment for dissolution of partnership business, and we are going to look at it separately as far as our lecturing is actually concerned. Is that okay? But with the dissolution of partnership business, we are closing the business and to actually end the going concern of the partnership business. Is that okay? And we have two different aspects of the dissolution of partnership business. One, under this dissolution, we have simple dissolution. With the simple dissolution, that is where the business actually comes to an end, and then they actually dispose of their assets, they settle their liabilities, and if there is any remaining cash, it is being done within 1 day. Is that okay? So that is a simple dissolution, and its treatment is also different. And we have the second one I would like to talk about is the piecemeal. Is that okay? So we have piecemeal dissolution. With the piecemeal dissolution, that is where the partnership business actually comes to an end, but the disposal of their assets, the settlement of their liability, the sharing of the remaining cash is not done within 1 day. Maybe the disposal of the assets is done today, and maybe the receiving of the disposal proceed is being actually received maybe next year, and its accounting treatment is also different. So it is your responsibility as a student or as an accountant to actually know the accounting treatment for all these concepts under partnership business. Is that okay? And these changes in partnership business, these 4 changes in partnership business may give rise to certain things. Is that okay? And 1, it may lead to the changes in the profit and loss sharing ratio. If there is any, these changes in partnership may also actually bring changes in the profit or loss sharing ratio. And also it may also bring about the revaluation of their assets and liability. Is that okay? And it may also lead to the valuation of their goodwill. Is that okay? So we are going to look at how we value goodwill, how we actually value our assets and liability. Is that okay? So we are going to take them one after the other. So your job here is to just subscribe to this channel, turn on the notification bell, so that anytime I begin to release videos on these subtopics, you get actually notified. And also comment, like and share these videos for the benefit of others. Until we meet, I think bye for now.